Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta Exchange. I just finished my workshop in Delhi. I'm on the way to Dubai. So that's why there's a podcast. But tomorrow onwards, we will resume our regular videos. First, let us see what happened last week. It was a fantastic short covering rally in US markets. Before last week, S&P 500 fell nearly 300 points. I remember the high was about 4,425 and it came down to 4,136. So it was nearly 300 point. That is means like it's about roughly about 7%, more than 7% fall. But what happened last week? There was a reversal, a huge short covering, and market shot up nearly 250 points in just last 1 week in 5 trading sessions. So in 5 trading sessions, US market moving 6% higher. No, that is just a huge, fantastic short covering rally. But however, the first 3 days, we did not react, but only in the last 2 trading sessions, we reacted. And we reacted as usual violently on the higher side. On Thursday also, Nifty gap up 150 point. On Friday also, Nifty gap up 150 point. Looking at GIF Nifty, Monday morning, we are likely to open another 150 point gap up. See, 3 trading session, 150, 150, 150 point gap up. On the way down also, Nifty reacted like that only. So, last week, though US markets moved 5-6%, but Indian markets moved just about only 1%. So, therefore, if the reversal continues in US markets, and then there is a more potential for Indian markets to move even higher. Anyway, our markets, IT, like as usual, TCS, Infosys, HDFC Bank, ICICI Bank, and Reliance. Now, the next two in line is ITC and LNT. So, these stocks have not performed well. So, therefore, at index level, the performance was not really very good, while the broader markets are doing very well. There will be a day, but we don't know when these 6 or 7 large cap index heavyweights may outperform. So, that is when the markets will come into bullish territory. As of now, the major trend in Nifty is still down, but it is on recovery mode. And Nifty technically becomes long above 19,520. So once Nifty crosses 19,500, so we have to be very, very careful, but there's a long way to go. Still, yesterday Nifty closed around 19,200 plus. Even another, like, though 150 point gap up tomorrow, then usually the gap ups will be sold into. That's what happened on Friday also. So though Nifty opened 150 point gap up, and now the 50 point wiped out by the end of the day. So Nifty just closed about 100 point higher. Moreover, the Nifty future premium is coming down. And for the last few months, the Nifty future premium used to be more than 100 point in the beginning, and just in a matter of 2 weeks, that it comes into discount. But this time, that may not happen because this month is a 5-week month. It's not a 4-week month. So, since the markets are also bullish, so the premium may maintain between 50 point and 100 point, at least for another 1 week. So then we will see later. And now we are going into, with a positive bias coming week. That's because US markets recovering and Indian markets also recovered for the last 2 trading sessions. FIIs also reduced their selling. They are not started buying, but at least they reduced their selling. And so things can turn in favor of bulls if the recovery continues in large cap index heavyweight stocks. And State Bank of India came out with better than expected results. So, but we don't know. The day after the results, usually the reaction is based on the positioning, not based on the results. So we don't know how much of long or short positions are there in State Bank of India. Other than that, if Reliance picks up, or IT like TCS, Infosys, ITC, HDFC Bank pick up, things may turn around. But somehow I feel that the Bank Nifty may outperform the Nifty. So there were indication on Friday itself for the outperformance of the Nifty. On Friday also, Bank Nifty has outperformed Nifty. So the Bank Nifty may be in focus. And coming week will be, a week before major festival, Deepavali festival. And usually around the major festival, we tend to be positive rather than negative. So now looking at the open interest, so one can say 19,000 is a very, very safe level. I think 19,000 put option has the highest open interest. But the way markets are moving violently on the higher side, we can say only 20,000 is the safe zone. So markets are consolidating between 19,000 and 20,000 for a long time, at least for last 2 to 3 months. Occasionally overshooting 20,000 on the higher side and occasionally undershooting 19,000 on the downside. So otherwise it is 19,000 to 20,000 is the range, but this range cannot go on forever. Ultimately, range will have to break out or break down, but the probability of breakout is very, very high. And however, next few weeks will be, there'll be a lot of headline news based on the state elections. Of course, the results may come only on December 3, but there will be some exit polls. Although exit poll results will not be released to the public, but definitely some privileged people will have that information. And they will be reacting in the stock market according to the exit polls. So remember, people will take the exit poll, but they are not allowed to release it to the public. But in India, they will be releasing to some privileged people, and no one can prove it. So that is what exactly happened in case of Brexit also. And in fact, during the Brexit, they actually banned exit polls. But some, hedge funds, they have done their own exit polls, but they did not release it to the public. So anyway, if you're a technical analyst, so you will not worry, because, when some people have some information, which will be, they will be taking positions in market, and that will be reflected in technical analysis. There are few more corporate results are left, and I think most of the major corporate results are out already. So now markets may not be focusing on corporate results. Now the markets may be focusing on global cues, and then other usual data like, consumer price inflation data in India as well as US. I think next week there will be consumer inflation data both in India and US. Since I had a workshop for last 2 days, I did not check the dates exactly. And markets, since the market has fallen from 20,200 to 18,850, so that is nearly about 1,400 points. So from there, at least 700 point recovery will take the market to 19,500 to 19,600. So that is the first target, and the second target will be 19,800. But if you are an option seller and if you want to sell options, so the safe is 18 to 19,000 on the downside and 20,000 on the upside. And last week, the markets moved very violently, and even some of my friends sold put option at 5 rupees. They had to square it up at 150 rupees. So that was the gamma effect. But now this is only a second week, so we still have, after this week, we still have 3 more weeks. And the following week will be, Deepavali celebration. It's a truncated week. So there may be a lot of action now on the higher side. So let us hope 19,500 will be reached by the end of this week. So I don't have much more to talk because last few days I was too busy, so I could not gather some other information. So apologies for that. So we will do better analysis next week, next Sunday. Hope you enjoyed listening to this audio podcast. Thank you for listening.